what is going on in the markets. Specifically, I want to talk about what's happening in the debt markets, the bond markets, and the biggest, most liquid, supposedly most stable market in the world, which is specifically the U.S. Treasuries, the government debt. Most people, when they think about markets, they're probably thinking about their index funds, their 401ks, the S&P 500. That's not what the most professional, real investors look at. You see, Treasuries, stocks are typically like trailing indicators. What we really want to look at is what's going on in the debt markets and specifically in the Treasuries. Now, we don't want to just look at it because of what's driving the market. We also want to look at it from this geopolitical lens. And this is a story that we're starting to see. We've seen that the U.S. bond, the U.S. Treasuries, the yields are going completely haywire. Why is that? The 10-year just cracked 5% on Thursday for the first time since 2007. Why is that? Well, it's easy. Supply and demand, right? Prices move on supply and demand. If prices are going up, what does that mean? Well, in this case, it's debt. So you have to think about the value of the bond and the yield that it provides. So this is debt. So you have to think about it a little bit different. So what do I mean by that? If I want to borrow money from you, you are going to charge me an interest rate. If I think you're very, very, very safe and there's no way I'm going to lose money, I'm going to give you a lower interest rate. If I think you're very risky, I'm going to charge you a higher interest rate. Also, let's say that there's increased competition. So there's 10 people that need to borrow $1, but there's only 3 people with dollars to lend. Those 10 people that want to borrow have to compete for the only $3 available. Those 10 people that are competing are going to offer higher and higher yields to get that money. When you see the U.S. Treasury yield going up, it just cracked 5%, that means they're having a hard time borrowing money. People want to charge them higher rates, either because the credit worthiness is dropping or there's not enough people loaning money for the demand that's required. In the case of the government, it's both. The government's credit rating has been getting driven down. At the same time, the U.S. government is issuing more debt, needing to borrow more money than there is money available for it. So the price goes up. Now, what we're seeing is bond market dysfunction. It's the second worst bond market since the onset of the Civil War in 1861. The markets are really starting to feel the effects of this, and the government is starting to feel the effects of it as well. On a small scale, we're starting to see people starting to be less involved in the bond market and going to hard assets like gold and Bitcoin. Certainly starting to see that. But part of it isn't so much the demand side. There's plenty of demand. People are still buying the treasuries. They're just issuing too much supply. And the reason why they're issuing too much supply is because of the deficits. The U.S. budget gap soars to the largest outside of the COVID era. Federal government posted a $1.7 trillion budget deficit for the fiscal year of 2023, which is a 23% increase year over year. The Treasury Department said that the deficit was the largest since the COVID-fueled $2.7 trillion gap in 2021, and it marks a major turn to ballooning deficits after back-to-back declines. So the government is continuing to spend more and more money. The deficit means they're spending more than they're bringing in. What they're bringing in is declining. Tax revenues are going down, but they're spending more at the same time. And so because of that, they're having to borrow more money. There's not enough money out there, and so the yields are going up. Now, this is only getting worse. We see this getting worse now. We're fighting 2 wars. As a matter of fact, Janet Yellen is all over the news saying, yes, we can, of course we can fight 2 wars. Really? The bond market's actually saying something different. That's what she says. And now we see this deficit is only getting bigger. We see Biden is now asking Congress for $100 billion in new foreign aid and security, $60 billion for Ukraine, $14 billion for Israel, and like $5 to secure our southern border, something like that. When you get into situations like this, we have a market, which means we have traders and investors, and they want to participate in this. They want to start betting on where the market's going. And some of these investors are so big and powerful that they actually can move the markets. So you might have heard of this term called the bond vigilantes. And bond vigilantes were a term that was originally coined in the 1980s, and it was a group of investors that were protesting towards this easy monetary policy, the irresponsible fiscal policies, not unlike what we have today. And they were basically selling bonds, which would then drive the yields up. And in turn, that increased the cost of borrowing for the U.S. government. The U.S. government's the one that needs to borrow the money. If they drive the yields up, the government has to spend more money to borrow the money. So they're trying to slow down the amount of money that the government could borrow. We've seen this again in the 1990s. The bond vigilantes came back again. And a lot of people are speculating that they're doing it again. But this time, maybe the speculation is a little bit differently. So now, we've been hearing for a long time that one of the largest holders of debt is Japan, but also China. And one of the biggest threats to our national security is the amount of debt that we have. If China has all this debt, what kind of damage could they inflict onto the United States? Well, we don't maybe have to speculate. We might already be seeing it. As a matter of fact, China just sold the most U.S. securities in 4 years. Chinese investors offloaded the most U.S. bonds and stocks in 4 years in August. Due in speculation, the authorities may have moved to beef up their war chest to defend a weakening yuan. The mainstream media spin is that they're selling treasuries, U.S. dollars, buy their own currency to boost it up. Maybe that might be the media spin they want us to believe. Or maybe they're doing it to cause treasury dysfunction. Maybe they're doing it to push the yield up so it costs the government more money to borrow it. It says the bulk of the $21.2 billion of sales were in treasuries and U.S. equities, with funds in the Asian nation also cutting holdings of agency debt. They also don't want to hold a lot of the debt in case there's a war. They saw what happened to Russia when Russia decided to move on Ukraine, and basically $650 billion got seized. And China doesn't want to do that. So China's cutting its holdings in U.S. treasuries, now down to $805 billion, which is the lowest level since 2009. Chinese investors sold a record $5.1 billion of U.S. stocks in August. So again, the media narrative is that they're hurting, they need the money, they're selling it to prop up their currencies. Maybe, or maybe they don't want to be stuck holding a bunch of money that the U.S. could seize from them. Maybe they want to drive the cost of the U.S. Treasury borrowing up so they borrow less money. Maybe. Now, how do we know which one it is? We don't really know which one it is, but we have some other indicators that sort of tell us what's coming next. So we can see they're dumping U.S. treasuries by the amount of tens of billions of dollars per month. In August, like I said, they unloaded $16.4 billion of treasuries. They've unloaded $500 billion worth of U.S. treasuries, and we're seeing the Fed raising rates. Now, again, what are they doing with the money? If we can understand that, that will give us a better picture. Maybe there's a little bit of insight by looking at what else they're doing. So we can see that China's central bank just added more gold for the 9th straight month. As a matter of fact, the bullion held by the People's Bank of China rose by 740,000, almost 1 million ounces of gold. That's what the central bank said. Now, the one thing you have to understand is that China never really tells us the whole story. If they're reporting that, there's probably a lot more than that. But that's the equivalent to 23 tons of gold. The total stockpile is now set at about 2,137 tons of gold, with around 188 tons added in a run of purchases that began in November. They've added 188 tons since November. Some experts, and I've broken this math down before, I don't have it off the top of my head, I didn't prepare it, but some experts speculate, I should say, that China might actually own somewhere around 30,000 tons of gold, which is a pretty big deal. 30,000 tons. Now, we don't know this. Again, this is speculation because China doesn't really tell us what they have. So we have to sort of guess that. But we can see that that is a really big number. Now, we can see if we look at holdings, known holdings in the world, the United States has supposedly the largest holdings of gold in the world. I say supposedly because they haven't been audited, but supposedly the U.S. has about 8,000 tons of gold. Germany has second most with 3,300 tons. Italy has the third most at 2,400 tons. China is down 6th place at 2,100 tons. Apparently. They just added 188 tons just since November. So to answer the question, are they selling treasuries out of panic to prop up their currency, or are they doing it as protection or antagonistically? I tend more towards in protection and antagonistically because they're buying gold. Where are they getting the money to buy the gold? If they're really hurting for money, why are they buying gold? And more than that, I would go even more to the antagonistically. Why would I say that? Well, you have to understand how the gold market works. The price of gold is set every morning on a phone call by what's known as the LBMA, the London Bullion Market Association. And the Chinese banks have basically disappeared from the LBMA gold price auction, which is very strange. We've seen basically the Chinese have basically disappeared. They used to be direct participants in this, and now they're not even there. The latest casualty is the Bank of China, which bizarrely is said to have requested a self-suspension. Before that, ICBC and the Bank of Communications disappeared, with zero commentary from the LBMA, the FCA, and the mainstream media on the matter. Even ChatGPT thinks that it's highly unusual and warrants further scrutiny. So what the heck is going on? Why is China no longer participating? Bizarrely, why are they no longer participating in the LBMA gold price auctions? They're buying massive amounts of gold. They don't want to participate in that. And at the same time, we see that gold is trading at a premium priced in CNY in Chinese currencies. This shows that the market for bullion in China has surged, at times commanding a record premium over international prices of of more than $100 an ounce, compared with an average over the past decade of less than $6. So what happened? Why did we go from $6 to $100? An ounce of gold in Shanghai cost $2,007, about 6% higher than the price of in London or New York, according to calculations by Bloomberg. This is interesting. What is going on with the prices? It's almost like there's two different markets. It says with the yuan falling, the property market slumping, and capital controls keeping money from leaving the country, investors are buying gold. That's what we're seeing from Bloomberg anyway. Withdrawals from the Shanghai Gold Exchange in August jumped 40% from the previous month, while imports climbed 15%. Meanwhile, inflows into Chinese exchange-traded funds rose to their highest since July 2022. Gold's also finding support from Chinese central bank, which has boosted purchases for 10 straight months as it diversifies its reserves. Why do you diversify? You diversify to protect. So this does not sound like a nation that is in hard financial shape, although I do believe they are. Every nation's in tough financial shape, so I do believe they are, but they're also doing something different, and they're creating an entire new gold market. We're seeing gold trading in a premium in the CNY, in Chinese currency. We're also seeing China buy oil in CNY. What this means is that gold buys more oil in China than in London because the price of gold is different. The world markets don't like this. This creates a vacuum. And what it does is it opens up a gap for traders to get in. If you can buy it in one market and sell it at another market for a difference in price, more or less, that creates an arbitrage opportunity. It's a risk-free opportunity. If I can buy it from you for 50 cents and immediately go sell it to this guy for $1, that's the arbitrage. That's risk-free. And if this continues to happen, if we continue to see this spread where gold is priced higher in CNY, and then you can use CNY to buy oil, then more gold and oil will head towards China. PetroChina International paid for 1 million barrels of oil using digital yuan, the first cross-border oil transaction using the digital currency. And so we're starting to see them using these currencies to play a geopolitical game. This is what's happening. Now, at a time when we have war breaking on out all over the world, I've been very vocal for the last year where I've kind of said that I think World War III is already happening, but it's not the hot war with shooting and nukes. It's really a war over money and information. And really, it's the people against the governments. I sure hope that's the case. What we're seeing with this is more of the financial warfare, which really sort of opened up during times of Donald Trump with trade wars. And now this is continuing. And this is what it looks like China's doing. They're preparing themselves for financial warship, potentially even inflicting financial warfare back onto the US dollar and the Treasury markets. And let's hope it stays there. Now, what's happening in the Middle East with the warships going on over there? China's now sending their warships over there. Let's hope that it sticks with this financial warfare. But what are you doing to prepare yourself for the financial warfare?